QuickBooks Online 2025, entering a receive payment transaction form. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are in our QuickBooks Online Get Great Guitars 2025 project file we set up in a prior presentation, opening the major financial statement reports like we do every time. The reports on the left-hand side. In the standard reports, we're within the favorites section, right-clicking on the balance sheet to open a link in a new tab, right-click in the profit and loss to open a link in a new tab, tabbing to the right, and then we're going to close up the hamburger, change the range for the first month of 2025. That's going to be 010125, tab 013125. Run it so it can refresh it, tabbing it to the right, repeating the process, closing the ham boogie, changing that range, going from 010125 tab, 013125 tab, run it to refresh it. Let's go back to the balance sheet. Quick recap of what we've done thus far. We entered the beginning balances, which we imagined came from a prior accounting system. Then we entered transactions necessary for a new business, typically that being the cash, the capital necessary, which can't come from running the business because the business isn't set up at that point. And therefore, we can get a deposit that we have entered from the owner or a deposit from a loan from the bank. We did transactions to record that cash increase from those items. Then we spent some of that money on property, plant, and equipment to help us generate revenue in the future. Then we finally bought inventory. And then we were finally able to make a sale of some inventory, which we recorded on the income statement. We can see the revenue for the inventory. Now, as we made the sale, last time we imagined that we made it on account, meaning accounts receivable went up. So instead of being at a cash register where we got paid at the same point in time, we're imagining that accounts receivable went up. So now we're going to record the receive payment form, which is the second step in the process. Let's do a quick recap of the process, looking at a flowchart. Remembering this is the desktop homepage screenshot. I know we're on the online software. Don't panic. We're on QuickBooks Online. We're showing the desktop just to see the flow of the forms, which I think is just a great pictorial form flow worksheets. That's all we're using it for. So in the event that we're making sales, we could make the sales at a cash register, in which case we would get paid at the same point in time, recording a sales receipt, which we'll take a look at later. Or we could make a sale where we do the work first and then we get paid later. That would be an invoice. The most common examples there being like a CPA firm, a law firm, landscaping, whatnot, depends on the industry. This time we're thinking about inventory oftentimes, which means you might have like ship the inventory and then build them. Oftentimes, however, you would like to get paid first if you can before you ship the inventory, but depends on the structure of the system. But from our case, we're going to imagine we enter the invoice. That means that we did an accrual thing. We can't simply be in a cash-based system if we have to deal with accounts receivable, and the fact that we're using accounts receivable will not be dependent on simply our choice. It'll be dependent on the industry that we're in. Like if we're a law firm, we're going to have to bill people for the work that we did. We can't really as easily get paid beforehand, although you might be able to get a down payment or something like that. That's just the way the industry is basically the point. So when we enter the invoice, accounts receivable goes up, the other side goes to revenue. Then, of course, we hope to get paid on it. Noting how we get paid will be determined in part by the invoice. We can tell them as we invoice them, we would like an electronic transfer, or possibly you can have the QuickBooks checking account that they could basically pay you automatically. You might allow other payment options like credit cards and PayPal and whatnot, noting that there's different kind of fees with those types of payments. But however they pay us, whether it be with a check coming in, giving us cash, some type of electronic transfer, we're going to receive the payment then. And when we get the payment, the question is, should I put it directly into my checking account at that point in time, or should I put it into a clearing account? Why is this a problem? This is the major problem people have with their accounting systems oftentimes. And that's going to be the grouping of the deposits that they're receiving so that they hit the bank properly, in particular if they're dealing with cash transactions and with intermediaries like a credit card. So for example, if you're getting paid directly with an electronic transfer right into your checking account, then you might actually be able to use the bank feeds to see the money coming in and connect the bank feed deposit to the invoice so that it can help you basically record it in that way. And if you have the QuickBooks checking, the system might be able to do that transaction basically automatically as it comes through, as the payment happens, as they pay the credit card. But if you don't have the QuickBooks checking and you're doing it with basically just an electronic transfer connected to your bank, for example, you're still going to get the exact amount. So then you can record the received payment using the received payment as basically a deposit form, using it to increase the checking account. However, if they come into your store and give you cash payment or something like that, then you don't really want to put it directly into the checking account, because you're going to put it in the cash register, which means it's going to mingle with all the other cash for all the other transactions. And then at the end of the day, you're going to go to the bank and make the deposit for the day's transactions into the checking account. That means that there's going to be a problem with grouping, because you're going to deposit it one lump sum into the checking account, and in your cash register, you had multiple payments. That's going to mess up your bank reconciliation process. Therefore, you would typically use a clearing account. Now, more likely these days, if you have an online kind of business, they might pay you with some other third-party application, such as a credit card. If they pay you with a credit card, now you've got this other financial institution between you, the customer, and your bank, your checking account. So the question is, what's the credit card going to do? They're going to do something similar to if they came in and gave us cash, because they're going to collect multiple payments, most likely, possibly, and then they're going to take a fee out of it. They're going to charge us and just take their money, and then they're going to deposit it into our checking account, which means we have the same problem, right? By the time it hits our checking account, a fee has been applied to it possibly, and it's going to be grouped together with other deposits. Therefore, I can't record the received payment directly into the checking account. I want to first put it into a clearing account and then transfer it from the clearing account to the checking account, accounting for any fees at that point in time, so that the amount in the checking account ties out to the same balances that are on the bank statement, so that I can reconcile with my bank reconciliation as easy as possible. If you find that you can't reconcile your bank account easily because you have to add up multiple transactions in our books to tie out to one single transaction on the bank books, then it's most likely that you want to fix your process and add the clearing account into the system. Now, you have other intermediary platforms these days too, like a PayPal or Stripe or something like that. And it really just depends on whether they're going to group the payments together and then deposit it into your checking account, in which case you want to have a clearing account to make sure that the deposits tie out in a similar fashion as with the credit card type situation. So that's what we're typically going to practice. Also, just note that even if you could record the received payment directly into the checking account, because they did an electronic transfer directly into your bank account, and therefore you don't have any combination with other charges, you still might want to use this normal transaction going into a clearing account and then go from the clearing account to the deposit account for two reasons. One is that you might have other transactions which do go through a credit card, in which case you don't want to be toggling back and forth between recording the received payment directly into their checking account versus recording it to a clearing account, because it's likely that you're going to mess up. You want your data input system to be uniform in regards to that field. And then two, when you see the transaction detailed in the checking account, if you record received payments into it, the system's not going to have all increases to the checking account being deposit forms. It'll have some that will be received payment forms, which is a little wonky when you filter and try to filter the transactions by increases. So I'll show you that as we go. All right, so let's go back on over here. We're going to go to the first tab. And now if we get paid, if we get money, again, it could come through the bank feeds. So if I go into the bank feeds and go into the bank transactions, then if we had the bank feeds on, which we'll take a look at in a future course or section, you could try to wait till it clears the bank and then use the deposit matching it to the invoice. But it's more likely that you're gonna have to match them up basically yourself when you receive the payment. So how do I do that? I'll be going to the sales over here, sales tab, and then you will recall before that I could go into the all sales area, closing up the hamburger, and I'm going into open invoices, and we could then go into our open invoices here and then pick the invoice that we want, and we're looking for Anderson, so one of Anderson's invoices, and then we can record receive payment for it. More likely, we're going to go to the invoices tab. One place we can go is the invoices tab, and then once again filter by the open invoices, possibly open unpaid invoices. So this is the other way we can get there. Or if I know I got a payment from Mr. Anderson, then, and that's a customer, it's likely that I would go to the customer tab and then filter by open invoices, which I have my filter screen up top, which makes it a little bit easier or cleaner. I've got 2 invoices from Mr. Anderson. Let's go into those, imagining that they paid us on one of those. So I could go here and then say, if this is the one that they paid, this is the one they paid us on. So I could go to receive payment from there, and it automatically takes me to the receive payment form. Or I could close that out, and I could say, well, I know I got paid from Mr. Anderson, so I could just hit the plus button, and here we see the invoice. Right after the invoice is the receive payment, so that's the next form in the cycle. Receive payment, and then I could type in Mr. Anderson, which is going to show up in the drop down, and then boom, and this date is going to be 01/16/25, let's say, and then choose a payment method. How did they pay us? I'm just going to imagine it's cash right now, but because I want to imagine that they came in and actually gave us cash, because then I have that problem of putting it into the cash register and going to the bank at the end of the night, combining the cash together. But remember, you have the same issue if it were like a credit card, for example. If it was a check, then possibly you could deposit it directly into your checking account because you're not going to combine the check with other checks before it hits your checking account. But again, if you sometimes get a check and you sometimes get cash and you sometimes get credit cards, then I would think you'd still want the default to be that you always do the same thing, putting it into the clearing account and then depositing it if that's your normal routine. It's only if you only get checks or you only get electronic transfers and you never have this matching problem that you would then put it directly into the checking account, in my opinion. All right, so then if there's a reference number, you have a reference number. So here's what I'm talking about the account. So we have, this is the checking account, and then you've got this clearing account, payments to be deposited. So if I left this as the checking account, it would go directly into my checking account, even though the money isn't in my checking account. I have it, it's mine, but it's in the cash register right now. And the checking account should be reflecting what's in the bank right now. And when I take the money from the cash register to the bank, if I was going to deposit it in the same dollar amount as I received transaction by transaction, that would be fine. But if I group it together, it's going to be a problem, because now in my books, I'm going to have multiple transactions recorded one at a time. And on the bank's books, it's going to have one transaction recording for multiple sales that were made. Therefore, now also remember, receive payment, this is the form that's different than a deposit form. If I put it into the checking account, it will act like a deposit form, increasing the transaction detail in the checking account, making it have multiple things, increasing the cash account instead of just deposit forms. So instead, I'm going to put it in here and say, let's go to the payments to deposit. And then I'm just going to deposit this one. Which one do I want? This one. All right. And then that, no, not that one. I want the other one. Dang it. This one. All right. So that was the beginning balance. This was the beginning balance invoice that we set up. Now, what's this going to do? It's a receive payment form. So when you hear receive payment form, the first thing you possibly think about is you got money and you're possibly thinking checking account went up. But actually the thing that we want to think the biggest thing is that accounts receivable always goes down. That's what the receive payment form does. It decreases the accounts receivable because we only got to receive payment on account, and therefore it's going to have an impact on the accounts receivable unless you got paid first, in which case you might end up with a negative accounts receivable, a credit balance in the accounts receivable. And then the other side could go to the checking account, but likely it's going to go to the clearing account, representing us holding on to the cash somewhere other than the checking account. That's going to be the general transaction. Now, when we record that, we could have a payment that was less than the full amount, in which case there would still be an outstanding balance. And so that would be fine if we needed to do that. All right, so we have the cancel down here, clear. We can print it. Now, this form is not typically one that we're going to give to the client. We could as a receipt, but it's not one we always do. It might be used just for an internal form. We could save it, and then we can save and close it. Let's do a save and close. And then let's go into the balance sheet and see which accounts are impacted. Not yet the checking account, but rather payments to deposit. Used to be called undeposited funds in QuickBooks Desktop, if you're used to that terminology. Online likes to switch things up. So they're going to, but it's the same idea. So there it is. There's the payment form. If I go into it, it's going into the receive payment form. Boom. All right, let's close that back out and then go back. Where did the other side go? The other side is going to the accounts receivable, should be going down. So in the accounts receivable, it's going to be decreasing for the payment to deposit. There it is, that one. Okay, so we're going to go back up. Now also the subledger for accounts receivable has to be impacted, matching out the accounts receivable by customer. So let's go back to the first tab. I'm going to open up the ham boogie and we'll go down to the reports and I'll close up the ham boogie, and then I'm going to scroll down to who owes you money, and let's go to the customer balance detail. Right click on it, open a link in a new tab, boom, and let it think a bit. Close up the ham boogie, run it. So now Mr. Anderson, one of the invoices is gone. So this is just breaking out the balance by customer, which should always tie out the subledger, which, it's a customer balance detail report, but it's a type of subledger from a textbook terminology. 23/7/21/50 and 23/7/21/50. If I go internally, going over here, I'm going to go to the ham boogie, going into the sales tab, and close up the ham boogie. We can see under the all sales that if I go into the 4 open invoices and I look at the transactions, I want to look at invoices. So there are all of the invoices. I'm only looking at the open invoices as opposed to now the paid invoices. So here are the paid invoices, and there's Anderson there. I could go to the invoice tab, do a similar thing. These are the unpaid invoices. I could then look for the paid invoices. Boom, paid invoices. And we have this other functionality, paid but not deposited. That's going to be this one. We got the money, but it's not hitting our checking account yet, meaning these are the ones that are in undeposited funds, in the clearing account that we have to clear out. Deposited, nothing thus far. And if I go to the customer side, we're going to go back into Mr. Anderson. And so then if I scroll down, we have the invoice. This one now says paid, right? So if I edit the invoice, if I go into it, it now says that it is paid. So here it is, paid, boom. And then, of course, if I close this out and I go into the other side, where was the payment? This is the payment, and it's closed. That gives us the little thing on the side. Let's go into the edit, and there's the payment, which is connected, of course, to the invoice that was paid that I can open up down here. So everything is nice and connected up, not just with journal entries, but the forms are all tied together, which is beautiful. Now just note that when we do make the deposit, we'll do it with a deposit form, and I could go up top, and if I went into the bank deposit, then it gives us this cool select payments included in this deposit, meaning these are the ones that are listed out that are in that clearing account, that undeposited funds account. So we'll take a look at that more shortly. Let's close this back out, and let's do another one. Let's go then, if I go back into, let's go into just to the invoices. And if I go back into overdue or not yet paid, so these are overdue, let's just say unpaid. So we also want to go to this one. It's going to be Jones Guitars, and look at the beginning balance one for the Jones Guitars has 2 of them. We can also see it in the customer area. So we could then go into the open invoices for Jones Guitars. 2 invoices. Now, if I wanted to pick one of them, I could pick the one I want, which is this one. Oh, now I edited it. That's not what I wanted to do. I wanted to make a payment, and now the thing is frozen because it didn't do it right. All right, let's try the other one. I went back. So let's say I want to go into this one and receive payment. So then I can create it that way. Or, again, I can close this out. I can go into the plus button. I could go into receive payment and type in or drop down the client, which is going to be Jones Guitars. All right, and so then payment method, again, I'm going to imagine it's cash so that I can imagine these cash payments are lumping together. We're not going to put it into the checking account, but payments to deposit. And then I'm going to choose this one, the full payment being made. What's the transaction that's going to happen? We're going to have the accounts receivables going down. That's what the receive payment does. It decreases the accounts receivable. And the subledger will be impacted for the particular customer involved, Jones Guitars. The other side then is going to get some kind of payment, which could go into the checking account, but more likely will go into the clearing account, in this case, payments to deposit. When I call it a clearing account, by the way, that just means that it's a temporary holding account until we finish the transaction, which means it'll go back down to 0 after we're done with that. Not to be confused with a temporary account. A temporary account is different. A temporary account means it's usually all the income statement accounts because they close out to the balance sheet. So they're temporary because we reset the odometer on the income statement, like on a yearly basis, rolling it into equity and starting over. That's a routine thing that happens on a time frame. The clearing account, that term, means that it's not going to happen on a normal time frame, possibly, but the clearing account is being used for a specific purpose, and usually the time that it's going to have something in it will be shorter in length, and it'll go up and go back down, such as this case. It goes up when we collect the money. It goes down at the end of the night when we make the deposit, grouping all the transactions together. Let's save it and close it. Check it out, balance sheet, run it so we can refresh it. Going into the A to the R, the pirate account. R. Oh, God. You did not just say that. What are you doing? This is professional. Got to be professional here. All right, we go into this is going to be the receive payment. Pirates aren't professional. Pirates aren't professional. That's the whole point. So there it is. All right, we're going to go back. We're an honest, transparent pirate. We're going to again go into the other one is going to go into the payment to deposit account. Jones Guitars, 7,500. Good. Let's go back. And then we know the subledger's impacted. Subledger, running it. So before I run it, you could see Jones Guitars had 2 invoices. I run it. Now they only have 1 open invoice. The total amount of $16,221.50 should tie out to what's on the balance sheet, $16,221.50. If I go to the first tab, we can also see that Jones Guitars now should have the payment that was received, and the invoice is now paid. marked off as paid. MUI B to the N. All right, let's do one more. So the last one was Smith Guitars. So I'm going to go back into the customers. Let's just do it this way this time. And let's go into the open invoices. And then we have Smith Guitars has one open invoice. Let's go into that. And then let's just pick that invoice and let's just do it this way this time. This is how we would normally possibly do it. Go into the receive payment. That would be the easiest way to go. Tab in through and we'll put this on the 18th. Let's do it this time. Payment method is going to be cash again, I'm going to say. And going into the deposit account, payments to deposit, what's the transaction going to do? It's a receive payment form, which means accounts receivable is going down because we got receive payment on account, accounts receivable. The other side is going to be going into some kind of holding account, typically payment to deposit. Also, the subsidiary ledger for Smith Guitars customer will be going down. Save it and close it. And then we'll go to the balance sheet, run it to refresh it, and then we'll go into the AR, the R accounts receivable. Another payment has been received for the $8,000. If I go into that, Smith Guitars payment, there it is. Closing that out, scrolling up, we're going to go back. Then the other side's going to be in the payments to deposit, $20,500 in there now. So there's the $8,000 here. Going back, the subledger for accounts receivable, breaking out by customer on the right. We can see that Jones Guitars had something in it before I refresh it. And then it removes that invoice. So now we only have these two invoices for Anderson and Jones. Total balance, $8,221. Tying out to the balance sheet, 8221. Let's go back to the first tab and we can now see in Smith Guitars that we have the payment. The invoice is now marked off as paid. If I go into the invoices now, we have then let's go into the unpaid invoices are just the two that we entered in a prior presentation. The beginning balance invoices are gone. The paid invoices now, we have these three that have been paid, but they have not yet been deposited. So we have this last filter, amount to be deposited. They're not yet deposited. So they're currently they've paid us, but we haven't got them in our checking account yet. So if I add those three up, it should tie out to the balance that's on our balance sheet for undeposited funds, $20,500 in the clearing account. Now, I just want to also point out that this clearing account is basically a cash type of account. It's a holding account. It's money that belongs to us. So from a financial reporting standpoint, it would be in the line item called cash and cash equivalents. But in QuickBooks, it's down here in other current assets. Why is that? It's because the checking account up here has a special need from a functionality standpoint in QuickBooks, and therefore it needs its own account type because it might be connected to the bank. Whereas the payments to deposit isn't a checking account type. So I think they couldn't really put it up here under the bank accounts, right? So like for reporting purposes, you would rather have these two grouped together into one account for external reporting, not called checking account or accounts to be deposited, but something like cash and cash equivalents. But again, from a QuickBooks standpoint, from a bookkeeping standpoint, we want to have the checking account have its own functionality connecting to the bank feed, and then this one's down here. So just keep that in mind. If you're trying to tie this out to like the statement of cash flows or something, you have to pick up this amount, which hopefully will clear out down to zero by the time we're doing financial reporting and whatnot. All right, if I go back to the first tab, we can also see that if I select the drop-down and go to the deposit form, which we'll do in a future presentation, we've got these three line items now lined up, the total of those three adding up to the $20,500. That's the amount that we expect to go to the bank and deposit, which of course we're going to want to do because we don't want to be holding on to $20,500 in cash, especially around here. You got criminals around here. Talk about pirates. There's pirates all over the place around here. So we got to get our armed guards out and go to the bank and put that in the bank before they try to. Just the other day, I heard some YouTuber they took him out, the YouTuber, and tried to get him to give him their password to the Bitcoin password or something. I don't know if I can believe. I don't really believe them. Not very credible. But I'm just saying, you gotta be careful. You gotta put the stuff in the bank. Get the armed guards to escort you. Anyways, let's close this out. That's going to be the general idea. Let's take a look at where we stand at this point in time. If I go into the balance sheet, you can check your numbers to our numbers here on the balance sheet. No impact on the profit and loss, the income statement report, because although we got paid, although we got money, we recorded the revenue when we did the work. And that was prior to this when we issued the invoice. That's what we typically do on an accrual system, which you're kind of forced to do, an accrual system, that is, if you are using accounts receivable, if you need to track accounts receivable. Let's open up the trial balance because I think that's the easiest report to check our numbers with. To the first tab, opening up the ham boogie, scrolling down to the reports, and then we're going to go into the trial balance. Open it up, closing the ham boogie, changing the range for 010125 to 013125. Run it to refresh it. This is where we're standing at this point in time. These are our two legs, the debit leg and the credit leg that we're standing on. Those are kind of our leg. I don't know. So you can check it, and if your numbers tie out to these numbers, then great. If not, try increasing the date because it's often a date issue. And if your numbers change, drill down on the changed number, finding the source document, changing the date to before January 31st, 2025, and see if that works. If not, after we do the data input for the first month, then we will we'll go back in and do a transaction report, which might help to find errors as well. So next time we'll make the deposit. We're just going to do once. We have to go through the accounting system just like you would pick your nose, right? That you just do it one booger at a time. One booger at a time. Except you don't do like boogers with the accounting system, because you're not picking your nose. But you get one transaction. The transactions would be kind of like equivalent to the boogers in the analogy. So we'll continue with that next time.